Fighting the flames is still job one in Los Angeles, but questions about rebuilding are starting to move into focus, especially how to pay for it. In tonight's Eye on America, CBS's Elizabeth Cook reports from California, where 7 of the 12 largest insurers have frozen or restricted new business in the last 2 years.
The fires that tore through Altadena turned the family home of Jeff and Jennifer Cohen from this to this.
I think there's some walls up. It seems like the second floor collapsed onto the first, but I couldn't tell you if there's anything salvageable.
Getting money to rebuild will take time, a long time. The Cohens have found temporary housing, but are among the 100,000 plus Los Angeles homeowners whose insurance had been dropped before the latest wildfires.
Did they give a reason why?
It's the fire hazard, it's the fire danger. You know, we were in an area that they couldn't provide insurance to any longer.
As victims like the Cohens come to grips with a devastating loss, analysts predict insurers could pay out more than $20 billion just from this wildfire disaster alone.
The kind of risk has been changing very quickly.
University of California Associate Professor Francis Moore studies the economics of climate change.
Any kind of healthy kind of financial risk management, we really want the insurers to have an accurate picture of what that risk is.
Nationwide, the insurance industry already faces tens of billions of dollars in losses from natural disasters.
So this icon is a simulated ignition point.
Rob Newbold of the company Verisk says one way to financially plan for those disasters could include computer-generated catastrophic models.
How does the climate conditions in terms of temperature and weather, taken together with where the properties are, with infrastructure in terms of things like putting the fires out, prevalence of local fire stations, prevalence of local fire breaks, all of these come together to run simulations of what could happen over the next 1 year of activity.
Verisk already offers to insurers around the country models covering everything from wildfires to tornadoes to hurricanes.
We have this deeper red color over in and around Beverly Hills. That indicates there's greater loss potential based both on the ignition point, the spread rate, the intensity of the fire, as well as the value of the exposures within that zip code. The insurance company can understand this loss potential and have sufficient money on hand to pay claims.
Under an old law to protect consumers, California regulators prohibited using models like these to help set rates. But the state is lifting that ban. Verisk is the first company to submit its models for approval.
What have you done? What has this experience been like trying to find new insurance?
So that was quite an ordeal.
The Cohens eventually found coverage, but only through a government-sponsored pool, and it's at a much higher cost than what they paid. But even that pool may not have enough money to cover the expected Los Angeles fire damage claims.
Will you rebuild in California?
We don't know.
We don't know.
We don't know.
I don't know.
We're just mourning the loss of all, the things that are irreplaceable.
Precious memories were in that home.
Those are the irreplaceable things.
Today, they live in limbo after the fires burned their home of 23 years to the ground. For Eye on America, I'm Elizabeth Cook in Los Angeles.